But despite today's rise, oil prices are still down about 20% over the past year. And as Brian Sullivan tells us, that might be good for consumers, but there's plenty of pain for investors.
The drop in oil prices is good news at the gas pump, but very bad news for oil and gas stock investors. Those shares have taken huge hits over the past year, with investors fleeing the group as fast as they can hit sell. And what's interesting and troubling to some is how the stocks have split from oil itself. Now, oil and oil stocks generally trade together, either up or down, but not really lately. Oil stocks have gone their own way, and not in a good way. If you look at the XOP, one of the biggest oil stock-related ETFs against oil, you can see that its shares are actually trading lower than when oil was around $30 per barrel. One analyst explains why.
There's a big real look at where these E&Ps are going to be in a year, year and a half. You can have crude prices dropping. You can have Permian pipelines coming on into the year end. At the same time, you have these E&Ps that are going to be brought back and reining in CapEx spending. And so that's going to really affect the entire oil and gas chain, from midstream companies down to pressure pumpers, down to oil service companies.
Half of all oil and gas stocks have lost more than 50% of their value over the past year. In many cases now, valuations are below where they were when oil was $15 or $20 cheaper. One reason are some of the concerns about the effectiveness of newly fracked oil wells and whether they will perform as expected. Also, debt fears, they loom large. Many oil and gas companies funded their growth by taking on billions in debt. And as prices fall, there is concern about whether that debt will be paid back. Investor pain in the group is everywhere. These are the average returns of stocks operating in specific parts of the United States. North Dakota, which is higher cost, and Oklahoma hit the hardest. But Texas and offshore, as you can see, also not immune to the investor pain. But despite the negativity, one industry analyst says, don't lose hope in oil. He believes that even while the United States is growing output, other countries are not, and that before long, the price of oil will turn higher.
The problem right now for the price is demand, and this is really where the trade war has obviously weighed so much, mostly as a matter of sentiment, psychology, rather than actual impact, physical impact on demand. You know, when this trade war subsides, maybe it doesn't even end, but just subsides, that's going to be a great catalyst for oil prices to go back up.
So far, that bull case has been put out to pasture, and investors continue to dump the oil and gas stocks. But with everybody so negative, if oil prices do turn higher, some believe it could make for a sharp reversal for this beaten up group of stocks. For Nightly Business Report, I'm Brian Sullivan.